morning, ladies and gentlemen. This is Butch Shorrock, Options University, Friday, May 25th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We are not implying or guaranteed any profit. As always, do not trade with money that you cannot afford to lose. And with that, let's take a look at the economic announcements that took place this week. Not much happening, a little bit of new home sales in the first 3 days, but not much there to move the market. Focus on the market was certainly on Europe and what was happening in Greece, Spain, etc., etc. The European debacle continues, and we see that the European situation has gone into recession pretty much across Europe, while the United States remains out of recession, and things are not looking that bad here. The only concern is the effect that Europe could have on us in the long run. Durable good orders came out Thursday morning at 8:30, and basically was a bit mixed as to the results that we got from it. The second announcement that came out at 8:30 had to do with jobless claims, which were a very, very slight surprise, as expectations were for 371,000, and net result was we got 370,000, continuing the goodness that has come out during the month of May, overshadowing some of the disappointments that took place in April. Friday morning, the consumer sentiment comes out at 10 o'clock, certainly capable of setting the pace for all of Friday. So be careful as we let that come out at 10 o'clock and find out what effect it will have on the market. Friday typically will many times have a bit of a slightly pullback, looking at the weekend, particularly with this being a three-day weekend with no market on Monday morning. With that, let me just point out that we will not have a market forecast until it'll be there on Tuesday morning rather than Monday morning because of the holiday. All right, let's take a look at next the SPX as it performed this week. Looking at the first 4 days of the week, my expectations for it to hit this 200-day moving average have not come to fruition yet. Thought that it might have been possible after this candlestick on Wednesday with that big, long tail on it. It actually showed some strength in the market. We are in an upcycle. This was a knee-jerk reaction on Wednesday from an announcement out of Europe, of course. And we see that the market is basically consolidated. Many wide range days, 15, 16 points as far as the trading range for the day in the SPX, as we see that the VIX has affected the volatility in the market. But when it's all said for the week, where have we gone? Nowhere. Trying to lay in a bottom and lay in some support at this level, which basically is somewhere a little bit below 1,300. And we see expectations are that we expect it to bounce back up into this area and change to a sideways trend for the summer, where we spend most of our time in this area right here. Now understand that is a projection and a projection only. We could continue in the cycle that we're currently in, which is a down cycle. Once we broke through this area right here and broke out of our yellow box, which was our trading range for approximately 2 months, we went into a down trend. Now we'll see whether that trend holds up. And remember, the downtrend, we're getting lower highs, lower lows, and we're spending most of our time below this 30-day moving average. My expectations are that this moving average will move down and then will flatten out as we trade within that range for the summer. But remember, that will mean a change in trend because the current trend is down, and so my expectations are that we could be coming into a sideways trend. We need confirmation by trading below the 30-day moving average and above the 30-day moving average. Until we do that, the cycle we're in is in a downtrend. All right, with that in mind, let's go ahead and take a closer look at those last 4 days. And we saw, boy, Wednesday showed a lot of strength when the bulls came in at the end of the day and shoved that market right back up. Day before, that, by the way, this was a news-oriented market that really went down a long way, but then did recover as the bulls recaptured control. Looked like we were headed up into an up cycle in our downtrend as we got a higher high and a higher low on Monday, continued that move on Tuesday, and then Wednesday we had news that shoved it down, but as you can see on Thursday, we're again headed up into that higher high and higher low. So we can expect a confirmation of this, and we don't really have that upcycle until we do get a decent confirmation, but it's looking like we want to bounce, and it will all be dependent upon that news which keeps flowing out of Europe, and we'll see how it affects the overall market. With that, let's look at the Dow for the week. Looks very much like the S&P. Did not get down to that 200-day moving average. Long candlestick and long tails on there after the doji that we had on Tuesday. Ended up with pretty much a hanging man on Wednesday, which is a reversal signal, and Thursday confirmed that reversal. But we still haven't made any big moves off the bottom, as we are getting volume being traded at this level, trying to provide us with some kind of a solid bottom in the Dow. All right, let's take a look at the NASDAQ, and we see the NASDAQ, again, the same type of confirmation that took place. Didn't have a big day on Thursday, and we'll see whether we can get the NASDAQ to follow through and head back up towards this level up there, or around 2950. We see the moving average at 30, day moving average moving right back into that range. So if the NASDAQ follows the S&P, our expectation will be a trading range for the summer between the 200-day moving average and this level right here, where we'll see candlesticks that will basically come up, come down, come up, come down, and we'll see whether that takes place. But if the NASDAQ follows that, we can expect the S&P also to do that. Looking at the last 4 days on the Russell, much the same type of look. As we see, the Russell actually did hit that 200-day moving average, and certainly was the weakest of all of the averages out there, as it did go back to that 200-day moving average. All right, let's now take a look at the VIX. We see that the VIX did go out of our normal range, our 85% probability range, where it spends most of its time between this 20-point and this 14-point down here. And we see that in the last couple of weeks, we have shot out of that up as high as 25. You see we're now drifting back towards that. If we do get range bound, you can see this, expect to see this come back in and see some of the premium come out of the market and some of the volatility come out of the market. As we see, the average true range of the SPX has shot up into the 15, 16, 17 point range, which is much higher than it was during the time when the market was consolidating in its higher zone. Next, let's take a look at bonds. As expected, bonds shot out of its previous range, went up to new highs for the year, and we are working our way up there in that higher range. As the market goes up and loses some of its volatility and some of the VIX, we can expect this bond level to come down and return to this same level that it traded at for much of the year so far. Kind of an aberration that the bonds are this high, and we look at the ETF, the TLT, which is an ETF, which gives us an indication of where our bonds are trading. This is an exchange-traded fund that is a treasury bond fund. All right, next we'll take a look at another ETF. We'll take a look at the XLF, which XLF is a spider fund, which gives us an indication of what the financials are doing. Financials have been debacled with somewhat bad news, as we saw JP Morgan take its big hit and draw the rest of the market down with it. Lost its trading zone, which it had had for a number of months in the year of 2012, and went down, found the 200-day moving average, and now looks very much like the S&P, and we can expect that it will follow that trend. And as the S&P goes up, we can expect that the bond or the financial sector will go up also. XLF is the symbol for our ETF for the financial market. USO, we'll take a look at oil. We see that oil has continuously dropped. We're actually seeing some drop in the gas prices. Kind of shocking to see that as we go into summer when they usually raise the prices to take advantage of the travel time. But we see that it has pulled back, and we'll see how oil does. I don't have a big production as to where that's going to go, but the ETF is USO. Watch for higher highs and higher lows and see if it does follow the market on up. With that, let's take a look at gold. As we see, gold has pulled back out of its trading range and has been pulling back since the first of the year highs, and we see that we're now down to 150, 141 on the GLD, which is an ETF, which is a gold exchange traded fund. Another way to trade gold without actually trading futures. All right, let's take a look next at the SPY and see what kind of volume we had. And we see that the volume we hit our low. We had our debacle that came down for about 15 days. We ended up with a huge volume surge as we got some kind of climax there. And then we began our sideways trend. And we see that we've been doing that pretty much on average volume. No big volume here. And we're looking for this to continue on up and give us maybe a higher high headed up to this level where we see the yellow box up there. All right, that's a prediction. You remember, you got to get confirmation on that, but that is a prediction on where we're going in the next month or so. For those of you that are not gold members, thank you for being here. Gold members, hang on. I'll be back with you in a minute or so when we look at our stocks to watch and continue looking at our momentum charts to see what they've done during the first 4 days of this week. So with that, the rest of you, thanks for coming. And if you are interested in seeing some other free videos from Options University, you can go to www.optionsuniversity.com/freegold and see how you can potentially see some other free videos. And with that, thank you very much for being here. This is Butch Shorak, Options University, Friday, May 25th, 2012. Trade what you see, not what you think. Thank you.